Good morning. Good morning. Excuse me, everyone. A little chilly down here in Tampa today. We'll give everyone a few minutes and then we'll get started and we'll give everyone a view of what we're looking at today. We'll also give a little update. We did place some options and we'll take a peek and see how they are doing. And we're going to stay in the area right now. We're going to go look at the futures, of course. The futures trading has been beautiful. I hope you're having a good time. And the stock trading is also very, very good. Our options trading. And so we're trying to give folks a view of how we go about getting these trades. Where do they come from? Because timing's everything. So we'll be back at the top of the hour at noon and be there shortly. Okay, we'll give everybody maybe a few minutes to chime in or patch in if they like to. Good morning. Good morning, everybody. I'm not sure I hit the right button there, but we'll be back at the just a few minutes past 12. We'll give folks a chance that want to patch in, a chance to patch in, and we'll give you a view of what we're looking at today. Just getting ourselves set up. That's a pretty view. Want to make sure to put it in high def. Let's take a look at that. Yeah, it's pretty nice. Pretty nice. All right. We'll be back in just a few short minutes. We will be with everybody in just a few short minutes. We'll let you watch. You're looking at what we call the SMC Trade Generator, Pebble Beach Triggers. This is one of our most original, or let me put it this way, our original, our very first radar. It's extremely good. We don't talk about it enough. We don't showcase it enough, maybe. Um, and mainly being is we using it. It can be used intraday. It can. It's just that if you're trading stocks intraday, our view is unless you're using options, you probably it's not probably an efficient use of capital. But for swing trading from a few from 1 day, 5 days, few days, it's an excellent tool. And in a few short minutes, we'll let folks populate that want to have an interest. Maybe they're out there shopping. Maybe they're out there. Have you seen what's going on with Bitcoin? Down 40%, folks, off its highs. 40%. Mm. All of a sudden, those cosmopolitan parties down in Miami got everybody in trouble. But we'll be back here in a few minutes. Okay, good afternoon. Good afternoon, everyone. I'm Bagadon. This is Stock Market Caddy, and we're giving you a little different view as we gear up to do some things. And we're going to try on a lot of these midday sessions to give you some trade opportunities, to give you some ideas. And this could be for annual members as well that are with us, and it could be new folks that are passing by. It's also, I hope, right? It'll be an opportunity for folks to ask questions, um, want us to, offer a maybe not so much an opinion, but maybe a little analysis on a particular stock or a market or a trading question. And happy to do it. We're going to do it for about 1 hour, about 1 hour, and 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 I'll just say this is that and we're kind of flexing here a little bit, flexible as we go into the new year. Hopefully, it'll become more customary. But I'll just keep saying this is that the more folks that we have, and we will do this regardless, right, of the number of counts on YouTube, because sometimes people see this at a later date, right? Um, but the more folks that we have that stop by and ask the questions, the more interesting it is, the more likely we will do it. All right. So um, let me just get things set up here, and we'll also gravitate, toward what folks are most interested in. Now, the options trades, I'm just going to offer a comment here. We put on some option trades yesterday, and the tool that we were using yesterday was the fairway radar, and we put on Apple down here. This is on the weekly S1 on Apple. We bought a call option. I'm just going to report in on this. We bought a call option, and we bought a January 16 270 call. Now I'd prefer to do put credit spreads, but we bought a call, and that call, the trade cost on that was $945. The position is currently, if we were to close it right now, we'd lose 25 bucks. So no big deal. We didn't draw any blood there. The next one was a long, also a call. We bought a call on Devon Energy, DVN. We bought a January 16 call at 35. At 35. We paid 209 for it, and we're down $70. So we'll keep an eye on that one. Oxy Oil Services, similar. We bought a call at January. These were all for January 16. A 40 call. We paid $131 for it. We're down 36 bucks. And then Philip Morris on the dark side, we bought ourselves a put for January 16, 560. We're down 5 bucks. So all total, we have our maximum risk. Some sirens. Maximum risk is 1,845. So not, a tremendous amount of risk. Not a lot of angst. Not a lot of screen time. And collectively, we're down 149 bucks. Okay, so rather see it up, but and I would prefer to do, or I'd encourage folks to do put credit spreads. In this case, though, we just went with calls and puts to keep it kind of straightforward. Okay, so if you learn to sell put credit spreads and sell call credit spreads, you're not going to make as much money. You're not on an individual trade, but you put time on your side. The decay means the money begins to accrue to you. So you forego the big hits, but you put time on your side, and you will do better. You will make more money over time. And it's just a great way to go. Anybody's got any questions on that, you let me know. So that's where we be. Let's just take a peek here. 1209, and let's here is the let's take a look at what we have here. This is the S&P 500. Do we have anything on a weekly on the S3? Again, let's take a peek. There's that now. I thought we did something with now. Apparently we didn't. Maybe not. Yeah, it was too expensive. I think it was like a couple grand. We opted not to do that. So there's nothing there. And then on the S2, we got Apache. So the oil services are still getting hit. And I think that would be a nice time to try to pick them up one way or the other. How you want to do it. There's that CSGP. We did not move on that, and that's doing okay. And then we got, what is this? What is this? Yeah, same thing. It's the Energy Services Group, and as counter traders with options, I would be looking to be a buyer. There's Devon, that's down a buck, and EOG. So it's all the oil services. They, birds of a feather flock together. Um, Money is flowing out of them at the moment. What is this? This is Marathon. Marathon. So all the energy services stocks. And there's Oxy. Oxy's down a buck. So we're playing for the bounce on those. And then Workday. We didn't move on Workday, I don't think. Oh, that was the cat growling or snoozing. And let's take a look at the R3 over here. Let's focus on this column on the S&P 500. We got anything in the R3? Anything? No, nothing in the R3. Anything here on the R2? We've got Comcast. So I might be inclined, doesn't have to be right here, right now, but I would be a seller of Comcast. I would, the most, now you can simply just go buy a put, but your probability of making money is about 33%. Um, your probability of profit is going to be higher, but your probability of making money is 33. If you sell a credit spread, your probability of making money goes to 66%. So I would sell a call credit spread. And maybe what you could do is sell a call as an idea. Now we're not going to place this one, but as just as a trade idea, you could sell a call at 30 and turn around and maybe buy a call at 33 or something along those lines, and do it for 30, 40 days and just let the money accrue to you. So what else do we got here in the R2? This is a weekly, so these are really overdone. This is Honeywell. What's going on with Honeywell? So same thing. The R3 is 202, so same thing. What I might want to do there is sell a call at 200 and turn around and buy a call north of like 202, 203, maybe 205. I'd have to price that out, but I would do call credit spreads there. And we will, before the week is over, we have a tool that will tell you what the best option characterization or the best option setup might be. But this is that IT, same thing. I'd be looking to fade these. This is where we get them. And there's Philip Morris, and yeah, this is the one. And we did fade that, and that's why we did it. It's still there on a weekly basis. And here's Tesla. Tesla's hanging out at this 480 mark. She's now at the R2. So what I would be inclined to do is I would probably sell a call at 500 and buy a call like at 510 or 515, 30, 40 days. An aggressive trade against the darling stock. More comfortable to buy it than to sell it. And we can slide over to the NASDAQ, and let's look at the NASDAQ quickly. Anything in the R3? Nothing. What do we got in the S3? There's that CSP. Some of them share indices. FANG. What else we got in the S2? Looking at the S2, and there's that Workday. So that Workday might be something where you might want to be looking at maybe selling a 210 put and buying a 205, something like that, and let it accrue to you. Very, very boring trades, but that's boring is good. Yeah, really boring. um, you don't want to be. Someday I will. I know we were asked, like, do you ever trade what you see, Donnie? We want to watch you trade. I want to watch you trade. We will do that. I promise. I have to do it sometimes, right? I have to trade what I see, and you have to stay honed on what you're doing. But if you can learn to get, get your trades just in a routine, just like any other job that you're doing, you get into a little bit a routine so that you can become more and more effective. So that's why, so I'm going to kind of stay with this view for a little bit, at least a few days, and we'll go back to the futures. I promise. We will do that, and we're going to move about. Um, Again, if you got things that you want to see and questions, we're going to show you something new here in a moment. Or, well, it depends. It may be new. It may not be new to you. It's not new to us, but may be new to you. Um, this, so these are sharing some of the same indices here, honey. Well, we saw these earlier. So these I'd be looking, and so Tesla now is in the neighborhood of where, um, I'd want to be thinking about fading it as an aggressive trader. Um, so let's go look at it. As a matter of fact, I might do that. Let's get it on. We got the others on. How? I'm gonna go price this out. Um, how we might do this. I think the responsible trade would be on Tesla is a call credit spread. So let's go out. We would go out to January. Let's go out to January 23rd. And what we would do, what we are going to do, right? Bear with me. She's trading at 480, right? She's right there at the R2, right? So this is on a weekly basis. So she's really rich up here, right? But because it's Tesla, I don't want to, and that's yeah, this is great. So they're going to pay us 23 bucks to sell a call at 500. That's how rich this thing is. But what happens if this bitch runs? So we don't want to do that. So we're going to take some of that profit, and let's go up here, and yeah. So it's I have to think about this. I'm going to price it out. What if we buy, I'm going to go down on the delta. Yeah, I'm going to go down to the delta at 530, and I'm going to buy a call. All right. And so bear with me here. You can follow at home. You can write this down. Right. I'm not going to get the account info up here, and it's going to have to go in. All right. So this is the deal. Our max profit would be about $885. Our max loss is $2,000. It's $2,000. Let's see what we can do here. All right, I like this one better. Actually, I like this one a lot. Be with me. Yeah, I like this one a lot, actually. This is better. Let me just keep making some adjustments. Okay, this is what we're going to do. We're going to sell a January 26th call on Tesla at 500. Okay, and they're going to pay us about 23 bucks. Then what we're going to do is we're going to turn around and we're going to buy a call at 515. Our max profit is 500 bucks. All right? 500 bucks. We're only going to do one of these. Our max loss is $1,000. I like that. The spread between the two, another little bit of a check on this, is the spread between 500 and 515 is 15 points, and we're going after 5 points, which is about 30% of that spread. So I like that. I really like that trade. So we're going to put it on. Hopefully this goes through. Just one of them. And we're in. So we'll let you, you can, you know, we're going to we're not, making specific recommendations to buy or sell anything. This is an educational YouTube session, educational, right? But if you want to write it down on paper and kind of track us, and we're gonna report on these things periodically. Um, I'm not going to. I can't, unfortunately, run any kind of a model portfolio here on YouTube. Um, so we're just gonna be, pretty active, right? But you can write it down on paper and see how we can do, and you can take a look at it. But I'm explaining, more importantly than the specific trade itself, I'm explaining where it's coming from and why we're doing it and how we're structuring it. Now, this is a swing trade using options going out, how much time is this? It's like 30 something days here. Um, 38 days. Okay, so this isn't intraday trading futures. And it's going to be different for what everyone can do. Now if you have the time and you can be in the screen and you have the capital, I get it. That's what we love to do. I love to do, but Susan also loves. Susie's, out shopping around, so she loves getting her options on, and she just checks them, in the evening, right? So it's depends upon what you're doing. That makes sense. All right. So I'm pretty comfortable with that. And yeah, and that's a credit. So that's going to put time on our side. You always hear about options, right? That the time decay kills you. It does actually. It is. When you buy an option, when you buy an option, yeah, the time decay. But when you sell an option, you put time on your side, and they're beautiful. When we first started doing these back years ago now, Susan wasn't very fond of options because all we were doing was buying calls and buying puts like everybody else. And we weren't doing that much, sophisticated with options. But just moving to credit spreads, credit spreads. Does that make sense? You're receiving a credit. You got debit spreads, but we want credit spreads. Do credit spreads, right? Start there. Teach you patience, put time on your side. When she started doing them, it's like, holy smokes, Don. And I told Susan, you take your money whenever you want. I'll just keep teeing them up for you. And this is where we would get them. This is one of the tools. We got other tools. And you just take them off, doll, whenever you want. And like, Donnie, these things are hitting all the time. That was her reaction. I would hope that would be your reaction too. And so, any case, I hope that helps. All right, let's slide over. I wanted to show you another tool, and at the same time, give you some trade opportunities. Let me and again, what we're tentatively thinking about, right? And I'm saying tentative because Bagger doesn't like to get I don't have a schedule. I like the flexibility of trading, and I like the flexibility. We work very hard, but I am thinking about how we're going to conduct ourselves, next year. By the way, we're purchasing a tool. We got to purchase a tool. You would think all these things you just like push a button and everything. We're purchasing a tool that is going to empower us. So if we have any annual members out there or any potential members out there, a live view on our website, and that live view will be up like probably like all the time. But bear with us. I gotta buy the tool. We ran into some issues, and I'll spare you all that. But hopefully this tool, our websites are for the most part are with what we call WordPress, and it enables us to get these other tools on there. So um, what I would like to be able to do is and begin to look for us around the middle part of the day, like around noon. You notice like this video was pre-posted at noon, um, and spend an hour with everybody. You'll notice too. I don't think we do this. I don't want to, and I'm not going to. We're not hammering anyone to join Stock Market Caddy. I don't like doing it. Um, we do post the videos. They're really meant to be um, inspiring, to take charge, whatever you go do. I mean, you get Jim Iorio's group. Jim's I got a good, podcast and everything. I just like to see people engage. We're now hearing that the Nasdaq might be going 24 hours. I think that's to try to crash proof it. Um, Good luck with that. But so it's going, it's going beyond the country of the U.S. It's going worldwide. It's going to go around the clock. But I guess where I was going is I'm going to be more apt to do these live sessions if we get, participation, we get more people to want to come in and watch and listen and ask questions and look at something. But the reason for that is I just need it to be interesting. I, I don't want to hear my own voice in my ears, right? And you don't want to hear that either. I want to make it interesting. So if you find it interesting, we appreciate the like buttons. If you know, suggest to other traders, in trading rooms and whatnot, hey, you might want to check out Stock Market Caddy around noon. Right now each day, especially during the holidays. But who knows? Maybe we can stay with that. We're working up some things where I might have a better. I want to get a better control of my time and how we do the Q schools. So there are going to be some changes there, but the good news is our pricing will not go up. Our pricing will not go up. Value will go up, but pricing will not go up, especially for existing members. That never happens. So I'd mention all that. SMC Trade Generator. What's going on here? This is one of our original um, tools. It's a great tool. It really is. And let me get a marker here. This guy. Circle it. SMC Trade Generator Pebble Beach triggers. And it's very, that's a little too bold there. Let's thin that out. And maybe I'll do it. Yeah, I'll just do it freehand. You know what? They got a vanishing pen, so I can do that. So I can write on, and then it's going to vanish. That's kind of cool. So SMC Trade Generator Pebble Beach. All right. So what is this? I'm going to go to well, let me show you the trigger. This is the trigger mechanism is here. We got all the stocks, S&P 500, and it's set on a daily. Now you could drop this down to like 13 minutes. 13 minutes, by the way, divides evenly throughout the day. Normal session 9:30 to 4. So that used to be when I first got started was the interval that I traded stocks. But the issue I was having though was I was trading too big. I was using too much capital. I mean, 100 shares of Goldman Sachs would be $87,000. I mean, it's a lot of capital to use, right? But you could use options here. But now you get into trading, if you're trading options intraday, now you get into liquidity issues, right? So you got to make sure if you're trading options that fast, or you have to have a host of options that are extremely liquid. Just know that, right? And Goldman Sachs probably, they're fairly liquid, and the IBMs of the world. But on a daily basis, and you could put it on a 240 and still treat it as a daily if you wanted, like, Don, I just want to get inside the day or an hour. But a daily is still very, very sweet, because I'm going to show you in a moment. But this is the trigger where they'll show up. The entry, it gives you the entry price. It calculates the trade purse. Now, what is the trade purse? Well, the trade purse is can be set by you, set by me. So we'll go here. So the trade purse, it's stocks, right? We're not trading futures here. Maybe we could, we should try to do that one day. Probably want to do that intraday. That could be kind of interesting. I don't think I've ever done that. Quite frankly, I don't think I have. The dollars per trade, that should be $10,000. So this is just gives the trade purse an opportunity to calculate. So it'll divide the number of shares that it can get with $10,000 a block trade of IBM, and maybe it's 10 shares, whatever it is. All right, so that gives us the trade purse. It also gives us, let me get my markup pen, this tool, the stop. Oop, I gotta get this back out of there. Oop, oh, for heaven's sakes. All right, so it also gives us the stop, which is nice. By the way, we are working on, with everything else, we are working on an interesting stop for swing machine, right? So this one does have a stop. And then the date, the entry date, well, that is weird. 1014. I'm not sure why that one's showing up like that. That's going to get resorted and will probably disappear. So I'd be a little suspect of Otis. But all the others, for the most part, are going to be the ones that are triggering are going to be. See, that one's kind of stuck there. I'm not sure why that is. I'll show you that we're sorting them. But most of these are all, most of them are all today on the 16th. And down here, these are triggering. I'm not sure why that is stuck like that. I could hit a refresh, but I don't want to right now. So how is this working? I'm going to show you. Let's go to a blank screen. This is the idea. When you have stocks, I got to get a pen now that's not going to disappear on me. I'm just going to draw some bars, and maybe I'll make them red. Okay, so we got a market that is doing something like this. These are bars, right? Trending down. And what happens is somebody bought up here and they're getting killed. Yeah, they bought and they're getting killed. And they're losing, they're losing. It's going to come back, it's going to come back, it's going to come back. It doesn't come back, right? It just keeps falling, falling, falling. And then you get a day that does something like this. It flushes them out. They're like, I can't stand it anymore. They close up their books. They close up their computers. They throw them against the wall. Don't do that. And no sooner that gets flushed out, and what happens at the end of the day, the market actually, that's the low of the day. It comes back up and forms something that looks like a little bit of a hammer. It actually hammers them out. And then what needs to happen is within 1, 2, 3 days, within 3, ideally within 1, but within 3, the high here gets taken out. And then we start doing this. This sort of thing. And we're running up, running up, running up. It's this condition. We want something that looks like it's going down, down, down on a daily basis. And it's this condition that tool is trying to find for you. while you're getting a cup of coffee, while you're walking the dog, while you're doing something else, or maybe while you're going from chart to chart to chart to chart, and you got chart blindness looking for something that looks like that, we're going to find it. So this is the other piece to this, right? If you are out there and you are looking for some sort of a pattern that you think that you see over and over again, um, let us know. Okay, we can write code to find those patterns, and then we can put them on a radar. Then you can sit there and do your nails, or have breakfast, get on a treadmill, say walk the dog, and let the computer find them for you on an interval you're choosing. So that's what Pebble is trying to do. And when Pebble sees it, it will trigger within, and you can specify 3 days, 4 days, but you really want it within three. You can actually specify it on one. Now we got the radar set very, very aggressively, so we want to see it on day one, day two, day three. It can continue to repeat in case I miss it, right? Because I don't want to miss it. But it will trigger right in here as soon as this high gets taken out. And the radar will light up, and we'll start calculating the entry. Where's the stop? One tick below the hammer. That's where the stop is. The other candle that it does, so it's actually reading candles. And the other candle this is the triggering candle. The other triggering candle after a descent, it's got to be after a period of time, is the doji, a will close doji. Hammer and a will close doji. Now we can do other candles. We can do engulfing and so forth, but these are the two highly probable candles. And that's what it's looking to do. But it's also, these candles can show up in the middle of a run or the beginning of a run, and they don't carry as much significance. So we got to have algorithms to make sure that we're in a good run, and we're looking for the reversal is the idea. And we'd rather buy it here. Why? Because the risk is lower. I mean, you can certainly buy it up here and buy it up here, and I can show you that. And then what happens is, though, some poor bastard saw this like, oh, it's falling, it's falling, it's falling, it's Bitcoin, it's going to zero, it's going to zero. I better short it, and they short down here, and then it reverses, and now they're underwater. And they're like, oh man, I always lose, it's rigged, and they start all that emotional crap, and then it starts running. Oh, it'll come back, I know Bitcoin's crap, Bitcoin, whatever. I'm picking on Bitcoin, but it could be anything. And the next thing you know, it doesn't. And it keeps going, And then what happens up here? Oops, what happens. It shoots to the moon. And the shorts capitulate. And then what happens at the end of the day? The thing comes back and gives us what looks like, in essence, an inverted hammer. Just the opposite effect. And it's capitulation. It's a signal that the market might be making a turn. Might. And what do we need to do? 1, 2, I can't. So it's got to be 1, 2, 3 days. Same thing as here. And then if it comes down and breaks, then we short it. And where's the stop go? Right up here. And down we go again. And we just keep repeating. And we're doing it off of these highly probable candles. Now, back in the early 2000s, I did this. You can do this manually. You can. I locked myself in the office for 3 months and did this and made a nice chunk of change. And Susie said, oh, that's great. We'll just do that. I said, Susie, I can't do that. I'll be a blithering idiot. It's too painstaking. I got to hunt. And I was looking at 13-minute charts going over and over. And I was using too much capital. So I said, well, you can't do that. So what are we going to do? I said, we're going to have to learn how to code. We're going to have to program. That's kind of where it all started. And in this setup is what we call the Pebble Beach. And I have played Pebble Beach, and it's one of my favorite. I haven't played it a lot, but have had the good fortune, and so I named it after one of my favorite golf courses. In the early days of Stockmarketcaddie, I guess actually I wasn't even Stockmarketcaddie wasn't even a thought at that time when we were doing this. Wasn't even a thought. I just named it after a golf course. All right, so let's clear this. How best I do that? Let me get a marker. But that is the longhand logic behind it. And once you have the logic of something, then you can, if you have the skill set, we do, to begin coding it. And then it's like, well, how do we want to do this? Do we want to get it on a chart? Yeah, we probably do. Do we want to do it as a study? Yeah, we probably do. Do we want to do it as a strategy? Yeah, we probably do. Why? Because then it enables us to um, do some back testing. So now here is SMC Trade Generator with that code, and this is, let's go look at some of these. So and it's real time sorting, real time sorting, and so it's given us all the sell signals. It's not all of them. There they are. And just look at all these. These are all being fired today. This one's underwater. It's kind of awesome. It may be off by a tick or so. We got them going from low to high so that we can act on them. But virtually every single one of them is in the money. So they should look right to your eye. So let's go look here. This is NTRS. I happen to pick on this. I don't even know what that is. Northern Trust. And guess what, folks? That looks like a short to me. It does. I mean, they should look right. So what could you do there? You could short it. You could. Or better yet, maybe sell a 140 call and buy a 145 for 30, 40 days and let the money accrue to you. This is where we get them. Let's look at some others that are of interest. This is that Otis. This is firing today. Otis. Okay, so we can set the discernment in a number of ways, but I can just have done enough of these. This one would have been a very good one to get, but I'm not. This is probably going lower, but it's not as enticing because we've already had a pretty good fall. So I'm looking for some big fat ones. So this is Visa at 345. Well, the buy triggered here, and we're getting, it hasn't yet triggered on the screen yet, but it is giving us a short signal. And it does look to me like Visa could be a short because we may actually have even a double top up here. So I would put Visa on my short list to look at. And what might I do? I might sell a call at 350 and buy a call at 355, something like that, and price it out. And is it giving me a good risk reward over 30 days? All right, so what other ones we got? What is this? Walter Corp. Let's just click on it. That also looks very good, right? It looks really good. Here's the run up. Here's the capitulatory move. Here's the reversal. We're at 212. Well, Don, if I short it, it might run back up. Yes, it might. So, but it looks like it's certainly headed down. So they should look right. So what might you do? You might sell a call at, you could sell a call at 220, but 215 and buy a call at 220, let the money accrue to you. And just keep doing them and see how you do. Let's scroll down. Okay, here's what is this one? Prologis. Let's look at it. That looks good. That looks like it's coming in. Looks very good. And what might you do here? Sell a call at 130, buy one higher with the money accrue. IBM. That looks really, really good. Looks really good to me. In fact, it looks so good, we're going to go in and we'll just get a put on IBM, but you could sell a call at 310 and buy a call higher. You could. But I'm going to just go and get a an IBM put. IBM. And we'll do it out into January. Same time frame. Let's make sure. Let's see here. That is, yeah, January 23rd. IBM is trading at 301. And let's buy a put. And we'll just buy it. Not going to get 5 of them, just want one. And we're in. So we got to put. Beautiful. This is where we get them. Who else we got? UNH, United Healthcare. That also looks really good. So this is such a great tool. I mean, this can save you so much time and make your trading so much more effective. This is State Street. Look at that. Sell a call at 130. Buy a call at 135. Illumina. Another one. Sell a call at 135. Buy a call at 140. $34 stock. I'm probably not going to mess with this one. Look at this one. Goldman Sachs. Yep. Let's go get it. Let's get Goldman Sachs. And let's go out the same time frame. So what do we want to do? Let's do a call credit spread and let's sell a 900. So I'm going to sell a 900. Just going to get one. And we're going to go down on the delta. Delta there is at 42. So let's go down to about 27. All right, so we're going to buy a call. This is to start with at 935. Let's just get one. And that don't look quite right. Bear with me. I gotta change the date, get this thing to refresh. Okay, so max profit is 1118, and our max loss is 2382. Let's see if we can. That's better. Okay, so we have max profit on this spread would be 1,000. Max loss would be 1,900. We're picking up basically 10 points on a 30-point spread, 30%. I like it. I like it. That's what we do. On it goes. I think we were looking at that just the other day too. It looked right to our eye. So now those are all on the short side. What about the longs? And let me just minimize this. And at the moment, I don't think we have a soul here. Not crazy, but that's all right. That's all right. You know, trading is easy to us, but it does take time, right? It does take time away, and I get it. This time of year is a lot of demands on people's time, but we're here. We're going to hopefully be here So let's go look at, bear with me, go look at the longs. And this is window. That looks good. It would have been better down in here. This is Akamai. I'm not so. This is T-Mobile. All right, that looks good to me for a long at 198. T-Mobile. Um, that also looks pretty good. That looks good, right? They look good. They look right. Um, Now you could, give it a little, there's no rush on these, but what is this? This is what is KHC? What is that? Kraft Heinz. So it's a defensive company. Yeah. I mean, we could sell a put credit spread there. T-Mobile. Let's just go buy a call on T-Mobile. So let's go get it. It's the symbol is TMUS. T-Mobile. And we're going to buy a call, and we'll do it at the money. So we'll buy a call at 200 for 38 days. It's gonna cost us $6. We're gonna put on a market order in here and get this thing in. You would want to I want this one in, and Feely. Let me see here. T-Mobile. Might want to make sure that's a limit order. I got scalped there a little bit. All right, so we're in. Let's go back to our live stream. And at the moment, we don't have a soul here. I don't think, but that's okay. I am bagged on. This is Stock Market Caddy. We're not going to go any further. We're trying to show you that you can be diversified in how you trade, in what you trade, and in how you trade. And we think that is a beautiful thing. Let me make sure too. By the way, I hope we're up, but there were some people timing in. Let me make sure that I did this right on YouTube too. By the way, while we're here, did it? Yeah, it's live. It'd be live. I didn't. I guess I should have shared it. I didn't. So as people will find us, we'll stay with it. Middle of the day. Look for us around noon, and I'll go ahead and repost that. All right, so we'll hang out for a little bit, answer any questions of folks that might come through, and then we will call it a day. We'll be here. Any questions, you let us know. We'll be here for a few minutes.